Hello and welcome to my YouTube channel. Before watching the video, don't forget to subscribe. Hello and welcome to our beginner's guide to understanding the price-to-earnings ratio, also known as the PE ratio in the stock market. So what exactly is the PE ratio? It's a financial metric that helps investors evaluate a company's stock price relative to its earnings per share. Here's how you calculate it. Simply divide the current stock price by the earnings per share. For example, if a company's stock is trading at rupees 50 per share and its earnings per share is rupees 5, the PE ratio would be 10. A high PE ratio typically indicates that investors are willing to pay more for a stock because they expect higher earnings growth in the future. On the other hand, a low PE ratio may suggest that a stock is undervalued. Keep in mind that the PE ratio is just one of many factors to consider when investing in stocks. It's important to look at other financial metrics and do thorough research before making any investment decisions. I hope you understand the concept of PE ratio in stock market. Comment your opinion, like if you enjoyed the video, and subscribe to the Tectonic Motivator channel for more interesting updates.